All right, guys, what's going on? It's what is it? It's almost 9 o'clock my time, so it's a little late. Apologies for doing this late because I know I teased with this video in the Telegram earlier today, but it is what it is. I got a toddler, and she deserves, not just requires, deserves my utmost attention. So I'm going to try to keep this short and sweet. As a reminder, none of this is financial advice. If you guys are interested in any of the platforms I use, you know the deal. If you have any questions, hit me up on Twitter, Twatter. And yeah, let's get right into it. So, the engulfing. So, the other day I shared, this is now 2 days ago, I shared that basically 100% of the time when you have these engulfing candles, it leads to the following day closing lower. And often it's actually not just the following day. It's often that the following days end up closing lower. So there was some confusion about that because the way I worded it was probably terrible. 100% of the time, and it's all I'm basically doing is defining the engulfing as just the actual candle criteria being met and leaving out context that I think makes it much more significant. So we'll get into that. And yeah, using the strong language is never a good idea, especially in trading and markets, saying something works 100% of the time. But you will see when you begin to sort of whittle this down with a little bit of nuance that this is ultra reliable. And there's very few things that I think are this reliable that are, I guess, this simple. But needless to say, even when there's something that has a significant sample of positive outcomes, it at some point, like, there's going to be periods obviously where it just does not work. So it's worked significantly to this point. The day that closed after that day was an indecision day. So actually, depending on how you have your settings, some of you might have a red candle, some of you might have a green candle. I know on some platforms, like if you have an indecision day where the open and close is X amount of percent away from each other, it's kind of just not labeled at all, because really, although there's obviously a range intraday, for people that are looking at like daily candles, sometimes you'll just see that those are like grayed out. But anyway, we ended up getting the move lower. So I said that when you have a candle close like that, it's rarely the case that that is the low. So we had the move lower, but then we ended up again closing right above the open. And then obviously today, which is now since closed out, closed red, and we saw a significant move down. So I want to define what satisfies the engulfing candle, and you'll see that there is some disagreement about this. So an engulfing candle, in my opinion, why is that doing that? Reload site. No, please don't do that. Please don't do this wonky stuff. An engulfing candle, in my opinion, and you'll see this is like probably the more common application of this, is if you have, and let's just say this is after an uptrend, this is a green candle, this is the red candle. Okay, and there's a couple things that have taken place, right? So this closed green, this closed red, but we have one, taken the highs, and two, closed through the entire range. So we've closed through the low, we've taken the highs, we've closed through the low. You will sometimes see people say that, for example, this is an engulfing candle. Okay, if we've just simply closed through the prior day's open. Or you'll sometimes see people say that this is an engulfing candle. Right? We don't take the highs, we just close through the open, we don't even make a new low. And you could, obviously, there's a couple different variations of this. Close through the low, don't take the high. I think in terms of what sends the clearest message and what is the most significant, the first is taking the highs and then closing through the lows. And then the second, in terms of just how I think, we'll say serious it is this version where maybe you don't necessarily take the highs, but you end up closing through the prior day's lows. So just think about what this communicates, right? And there's a couple situations where, that's in isolation. We're talking about one candle. You could expect that things are a little bit more amplified when you close through multiple days of progress. But just consider what it's communicating, right? You have a market that is repricing higher, showing signs of progress, and especially if it's, let's say, multiple days. And then it's the equivalent of, let's say, one football team throws an interception at the 1 yard line and the other team runs it back for a touchdown, right? The progress is completely done away with. You'll often see that the engulfing candle days are more violent and more abrupt than the days leading up, which is usually, it's like one of the things that happens is it's like the market loses momentum and then you have sort of a cascade through positioning and through stops. But it sends a pretty, as I've said before, it's like a fuck you candle, right? You did all this work and then, you built your sandcastle and then someone smacked it down. And this is on the higher time frame. So if you see this on like the weekly chart, the daily chart, and up, this sends a clearer message, right? This has a way of, at least in the short term, really being a gut punch and a strike towards the confidence of, in this case, the bulls. Now, there were cases that I had overlooked. So I said, 100% of the time you see that this leads to a reversal and you at least have the prior day, the following day closing red as well, but it's often a couple days that follow, honestly. So this setup, in my opinion, was a success either way. And this was just to reiterate, like a point that I always have to reiterate. This was a short-term setup. So this is just like a single trick that you have in your bag of tricks, and it's a intra-week setup. It's be an intraday setup. I haven't even gone over, how you would play it. But it by no means is anything that I was saying was invalidating what seems to be shift in strength on the higher time frame trend. And that's not to say that this hasn't in the past. So, for example, there's been examples of this. For example, where it actually has led to a move of considerable magnitude and was something that looked like a complete trend reversal. One right here that you can see. But I did say, all right, 100% of the time, I completely overlooked some instances within this chart. But there were a lot of ones that people were pointing out that were just, again, they were not examples of engulfing candles. And by the way, if you see a couple lines on this chart, the lines that I have on this chart right now, let me delete, there are no drawings, so those are all the lines from, those are just POC. So those are points of control from profiles so volume profiles for these daily candles. I have the profiles limit, I just have the POCs, and I'm going to use that to just convey an example, make it a little bit stronger as far as like why this works out, and rather why it tends to lead to continuation. And it's there's obviously multiple reasons why, and it doesn't even have to do it, but the idea of just positioning being lopsided towards the highs and then the market trading completely below that, forcing that positioning to reconsider and then act as a supply and sell pressure above. So using the POC is kind of just a way of saying like, all right, that's where like the majority of the positioning is isolated, and if we're below there, obviously bulls are in a worse position, at least locally. But there were a couple of examples, there was numerous examples rather. That post had a lot of commentary of things that weren't engulfing. So here's an example right here, not engulfing. Let me make this drawing a little bit thinner. So not engulfing. Why? You took the highs, we closed back within the prior day. Okay. Another example, let's see, there was a few of them. Let's see. This is an example here. Someone pointed this out. I believe, we didn't take the highs, but we closed through the lows. Okay, it's what you see on transitions. Like, if that was an engulfing, plenty of things would be engulfings, right? This was an example that someone used. You had equal highs, right? But we ended up closing through the low. This is probably the best example of something that I still would overlook either way. So I'll get into why I think that is not something that is necessarily going to be weighed as heavily. But again, these are like, people get too hung up on when you share ideas for shorter term setups. People get really hung up on it. Like it is some kind of major call for a massive change in market direction. Really, it's just like, okay, this is a trade. If it doesn't work out, well, then whatever, I'll go fuck myself and take the next trade. It doesn't really matter, right? The fact that people really harp on these things and get all emotional about them, it means that they just overthink every trade, right? If you've been a trader as long as I have, I don't really give a shit about one trade from the next, other than missing like bigger trades, right? Missing major shifts in regimes and market environment. But I rarely do that, right? I might be slightly late to the turn, but it's very rare I'm going to be left behind in the dust and have missed like the tidal shift. But that's an example right there. There is another example right here. So this looks like an engulfing, right? Didn't close through the lows. Okay. We're looking at this setup. So you have a green candle. You have a take of the highs. Didn't close through the lows. Here is an example, right? Take the high, actually close through the lows. So this is something that satisfies the criteria for the engulfing. But the most important thing to me, and again, this is not some like magic bullet or golden arrow or anything. It's a pretty simple setup, but it often yields great results, right? It is a more reliable setup. The thing about this setup is I don't take it in the middle of a range, right? To me, the market has to have been pushing in a direction for at least a week, right? I need to have a multi-day, sometimes multi-week trend. We're using the higher time frame chart, so we're using the daily, and it's often going to be at extremes, and it's often going to be coupled with other details that I think are helpful in terms of setting a bias to begin with, right? Or not necessarily setting a bias, let's just say setting the table. Like we have an area that we would look to for a sign of control by either buyers or sellers. We're not there yet. We have that area marked off, and like a good trader, we're not going to be having much of a strong bias until we actually see the behavior around that level. Like the same reason why you don't buy resistance until it's flipped. Same reason why you don't blindly sell support. Now, I don't want to say that because there's many times when you have good reason to buy early at resistance and good reason to sell support. Done that numerous times. But I think you get the idea, right? So you have an area of interest we're looking towards. It's often an extreme if the market has been in such a higher time frame range. So the idea of taking something, right, like this, looking at this, okay, sure, you could say, what is this setup? It's an engulfing setup, and it's also a break of an inside day. It's an inside day failure. So you have a couple things intraday there, but I don't think that the eraser's not working. I don't think that you prioritize and look at this and really weigh it nearly as heavily as if you're retesting an extreme, right? And the same works for the other side, a bullish engulfing candle. So this is, just look at this structure. This is from one extreme to the next, right? And this is the scene of the crime right here. You're dead smack in the middle of that. You locally have been putting in lower lows, lower highs. Yeah, are you looking at this as maybe the third punch to continuation lower? You could be, right? And this is just an example of, this is something you will learn when you look at a setup like this. And for example, I'll throw myself under the bus. You take someone's tweet at face value and they didn't do a great job communicating it anyway, kick myself in the nuts. And you just take every example that pops up and, short it or buy it. No, that's not even the setup, right? That's just a sign that there's been a shift in control, right? And at extremes, I think it's obviously much more significant, right? Versus it in the middle of kind of nowhere, where if you're looking at the structure as a whole, right? If we were just, let's take like a volume fixed profile to this point. where's the POC? It's literally right there. So you're kind of taking a trade around fair value anyway. Like this is the area where things would chop. I want to take this at extremes. So I think that's probably one of the most important details. Like probing at extremes, whether it's a major supply zone or a major demand zone, or you're anticipating that since it has been in the past, that this is likely to resolve favorably as well, or just lead to some kind of trend reversal, mean reversion, counter trade, whatever. Another thing is when there are other ways, obviously, to substantiate this setup and make it much more potent. And I would imagine one of them right off the bat, and that would be like a swing failure setup. So if you look at this, you could say locally, if we're just going to, argue, if we're going off of just the definition of swinging above the prior day's high, right? Your swing failure setups are going to have more space between them. It's going to be a little bit more meat on the bone rather than just looking at prior day's highs or prior day's lows and playing swing failures off that. Plenty of times there's great trades at prior day's prior day highs and lows, but you could look at an example like this back here, and this is, again, I think this is a much more significant example, right? You have you're at a prior supply zone. And also this is leaving out a bunch of other confounding factors as well, right? We're not even talking about order flow at all. So if you already have the evidence in the order flow, whether it's a bunch of OI coming in, Coinbase basis, thinking of recent ones that have been very effective. Coinbase trading at a discount to Binance. You have depth really starting to advertise and remain sticky above. And then you have this setup and you have this kind of swing failure that's already taken place right here. Went for a second shot, right? Went for a second shot here and then left you with this, disgusting engulfing candle. Then I think obviously, there is a lot more substance to that setup, right? And again, you're taking other things into consideration besides just being, listen, there are people that are just price action traders and just candlestick traders. And I know plenty of them that are very successful. I think that you want to have a little bit more than that, right? I think you could skip some of the shittier trades that you might just take off price action. But anyway, to each their own. So this setup, I think, was obvious, or at least it had a little bit more merit because it was at a significant sort of inflection point, right? Sort of right at that 70K level. I think we hit like, I don't know, people joked around that we hit like 69, 420 or something like that. But that's not even the setup, right? That is literally just one sort of defining feature, and I say it's the fuck you candle, that it should at least just get your attention, right? If you're also, there's a couple things that you could just be scanning for on a higher time frame chart and get these easier trades. And this is kind of like your swing failure, your engulfing setup, your inside day setups, your multi-day balance break setups. But things that you should be able to just like, all right, you're looking at a chart. Oh shit. Okay. I see that. Like I'm not here busy trying to figure out like some really special jacked up trade. I have this right now I'm going to pay attention to. I know it works most of the time. Like this is kind of something that I could be a little bit more confident about adding size into, especially if it's, again, there's a lot more nuance to it. And in this example, because of this shift, right, because I think that this is something that locally is significant, this is not something where I'm going to be, pulling out all of the firepower and really just going balls deep in this. But the setup is also, just to clarify how I look at this setup, and just to reiterate, I did not short Bitcoin with this setup. I shorted ETH, right, by proxy and bought some Bitcoin puts at 67K. So this is, me looking at this setup as potentially dragging the rest of the market down and placing trades around it. But ideally, this is how I look at this setup. If you have this inside day break, that's the low of the prior day. Let's just change the color, make that red. What I often do is we'll mark this out, the low, and then the open of that prior day as just a zone to start focusing in on, right? Now this again, we're literally just starting on the daily chart. We're not looking at a profile yet. We're not looking at anything, but I want to have my levels on the chart. All right, so that is the low of that day. So the day that was engulfed. And look, we took out basically 3 days, with the exception that we did not close below that day. But if we zoom in on the structure, this is where I was talking about just throwing the POCs up to give you some more context. The volume for those 3 days was fixated towards the highs. Right, so the idea that you just fuck you to those days and then start trading below all of that pretty rapidly is a decent. It just adds supply, right? You're kind of adding a little bit of shock factor, and now you have to imagine that I'm leaving something out. Excuse me. I know I'm wondering why I'm tripping over myself. This portion of market structure, we saw a big pickup in open interest. So we saw a good amount of positioning adding into this. The market was very excited right here. And this is where the Coinbase basis began to flip. So now you break down and you have a bunch of people that are caught off sides. And that flip level, so that level that broke, where most of this positioning was just kind of probably easily added, a sort of comforting walk along that level. That level becomes the level that you look to sell, and imagine that sell pressure is going to start taking over when those longs start to sell out and hopefully try to get some kind of break-even exit on a bounce. So this is the low of that day. This was the open of that day, and that's the zone, right? So that's one zone that I'm going to be starting to at least mark out on my chart. And if I'm not looking at a chart, which a lot of times I'm not, I'm just marking that out on, placing alerts around that level being tagged. I'm spending a lot of time away from the desk more recently than ever, just because I have a little one. So I'm doing what I can using some tools to get me to the chart without having to be in front of the chart. But not only that, so for example, that is just the level derived from, again, a very, we'll say, crude price action method. I used to call price action traders in 2018 crude traders because, and I was a crude trader, meaning crude oil trader. But because it was just, I had been trading using DOMs forever, paying attention to order flow, and then you have people that are making money trading price action concepts. Just seemed like they're missing out on a little bit of the future. It's kind of like old technology, So anyway, so what was I saying? So that is the level based on that. But then obviously, if we're looking at our TPO charts as an example, we have a gap left in this area. So we have this single print gap. I'm trying to keep this short, but you can tell I had a little train of thought lapse. So that is the single print gap we're going to look towards. So we have a good amount of confluence, say right here. This low, sorry about that. The low of that prior day. That's the low. This is the singles. So the point is, as the market is bouncing and it's approaching this region, you're looking for either a loss of momentum, signs of weakness, signs of absorption, right? Overwhelming selling pressure. Might not be back on the first trip, but you might look at the next return to that level and rejection here. So a good example of sort of this concept being applied to lower time frames. And I don't think you just want to go sort of turtles all the way down with this and just apply this all the way down. I have not gone ahead and done the work of testing any of that. But you have, just off of price action alone, you have a high, and then you have a lower high right here, right? Sort of at this cluster. And meanwhile, at that lower high, you have sort of this engulfing candle right there, right? So this is a nice turn. So there's definitely weakness around the level. And, depending on how confident you are around placing trades, remember also, none of this shit really is going to make or break your trading career. So that's why I say, if you either grab your balls here and take the trade, or you're selling into the breakdown and you're getting less meat on the move. But the point is, this is a very reliable setup. And again, it's not my mistake for just saying, engulfing without adding any kind of further qualifiers to that. Because you had a lot of people pointing out this candle, for example. You had people going back here and pointing out this candle. And just to reiterate, this took the highs but did not close through the lows. So yeah, I mean, this is a very simple setup. But the point is just add this, keep this. Keep this in your bag of tricks. And when you see it pop up, look to see if there's an opportunity there, right? And there is often an opportunity because you've kind of taken one side of the market by surprise. You're trading below a bunch of positioning. You're at least going to get that first continuation move. And the point is, if you have something that is, forget 100%, successful 60% of the time, 70% of the time, there's something there, right? Just to at least place a trade, right? Or at least to begin to formulate a trade. And in this case, there was good reason to start considering that this level anyway would hold. So, I mean, holding this into these lows was, if you're expecting something like this in the short term, I think that obviously that was unrewarded for good reason. And yeah, that's it. 26 minutes long. Apologies. I wanted to keep that around 20, but have a good one, guys.